Jason,
Kyle.
We're going to talk about busting some mortgage myths today. So the first one we're going to talk about is student loans. I'll kind of go over the conventional side of things. So with conventional, a lot of lenders mess up. So there's Fannie Mae and Freddie Mac that regulate your conventional loans. They both have their own set of guidelines, very similar. But if you're really good at your job, you drill in on the differences between the two. So a lot of lenders, they just have blinders on, and they'll say, okay, well, if you have a zero payment on your student loan, and we have to take 1% of that and calculate that as a monthly payment, even though you may be deferred or not have a payment at that point in time. With Freddie Mac, you can actually only use 0.5%, which really cuts those payments in half, which a lot of times now you're talking another $10,000, $20,000, $30,000 in purchase price, or even be able to qualify for something you might even want to try to buy at that point in time. There's also some other caveats where we can actually get a payment letter from them, and if it shows the payment is actually zero, we can use a zero payment on that, as long as it's not due to like COVID or something like that in those situations. Temporary, right? But if it actually shows it's zero based on an income-based repayment plan, which is the key word, I can use zero for a payment. So for you agents out there, if you're hearing on a conventional loan, the borrower can't qualify for very much, guarantee if you call me, I probably can find out how to get a higher purchase price, especially if they have student loans, even if they don't. Well, what's the rules on FHA, Kyle?
So for FHA, if you are in deferment currently, we do have to account for a payment on those student loans. So typically the rules, we're going to have to use 1% of the total balance as a qualifying monthly payment. So that's specific to FHA. VA also has its own rules with student loans. You're going to have to account for a monthly payment unless your student loans are deferred for at least 12 months. If it's deferred for more than 12 months, then we don't have to account.
12 months from the date of closing.
From the date of closing, yeah, not from the time of application.
Which is another important rule, because a lot of lenders will take FHA guidelines and incorporate those with VA. Or just the LO doesn't know the guidelines. That's the most misinterpreted loan on the market, is a VA loan, because they are the easiest to do, which a lot of you agents need to figure this out when you're accepting offers. VA loans are the easiest to qualify, I promise you, okay? But that's kind of like the myth busted on some of the student loans that a lot of lenders are telling you. If you guys are out there being told that your borrowers can only qualify for so much, I can tell you about 90% of the time, the reason that Kyle and I do so much business on our team here is because we drill in and figure out how to qualify people for either more or find a way to qualify them. So reach out.
Thanks, guys.